I'm going to share with you 8 major fails that I see the outsourced accounting firms, bookkeepers, tax firms, CPA firms do, and I want to get right down to it. And I'm going to go through some of these talking points. So number one of the first things I see that they fail on is that they're not framing up value on this intangible object. Again, I've given you the tools. We have to talk about tax savings. We have to bring in the idea that you're an alternative to a staff person, because that's really what you are. We have to bring up the idea that you're going to save them time, that you're going to help them build a more profitable, more scalable operation. If you don't do that, if you don't frame up value on these things, you're going to fail, because ultimately I can get somebody cheap at QuickBooks right now on Intuit to do my bookkeeping for me. I can go down to H&R Block and have somebody do my tax return, and it doesn't cost a lot of money. But you can add a ton of value. Do not miss the opportunity to, first off, ask great questions to identify what's important to them, and then get skillful in finding ways to remind them of what's possible. Identify where they're stuck, show them the possibilities of where they can get to. And what's beautiful about this, they're using a big checkbook. They're a small business. It's so much better than individuals. But if you do not frame up valuable on this intangible object, you're going to fail. The people that I find that get stuck and don't close sales, you get leads and they don't go anywhere, their leads are crappy. And then you listen to you and you do nothing to find out the big problems that these customers have, and you don't connect yourself to those problems. You've got to do it. If you don't do it, you don't get to have a business. That's how this works. Or you don't get to charge very much, or you're going to create a business that you don't want. All right. So number 2. Not getting enough swings of the bat or casts of the reel. You need volume. Too many of you guys get upset that you get some bad leads in your digital, or you're tired of calling people, or you just want to sit and do, I want to lead and manage the people that I already have, or I just want to meet with my current clients. Tough. You don't get to succeed unless you get lots of front-end activity. You have to have enough meetings, because only a portion of those meetings will be good clients. You have to get enough good clients to have people that are actually going to take action with you. But I really mean it. You don't get to have a business unless you get enough swings of the bat. And again, go back to my 4 activities. Turn on the digital, right? Make sure you have remarketing. Make videos, put them in there, turn on ads, make some lead magnet. We can do all sorts of stuff. After you get the videos, start creating inbound based videos on YouTube. Get people to find you, and then make phone calls and bump into people and network and get out of your office. Go get some sunlight, go do something. And then the last thing, invest in your current relationships. I've shown you the way, but you will fail if you don't get enough front end activity. Here's the next thing. And these are real. Not ringing out the package yourself. A bunch of you guys forget that while we're trying to connect their problem and value to us as a solution, you also need to straight up slaughter the bull yourself, okay? When they say they're ready, I would go get their credit card, like right there on the phone, do it through Intuit Payments, send them the thing. Do not let them leave. They're ready to go. It takes vision leaks on this stuff so much because your service sucks. Nobody wants to buy this. It's not like I get an electric bike and I can go play. It's not like I bought new blinds and I can enjoy them. It's not like I've got a new couch that I can really like. It's not like I got a new car that I drive around. No, you're just this bureaucrat in the back end of my business. So if you do not ring out the package yourself, the vision and value up that you built, the customer's conviction can very easily leak, and you just got to get them signed up. So when they say yes in that process, in that proposal meeting, take their information right there. Like, close them out, send them the thing, have them click it, do it on the phone, walk them through it. Do not let that lead. That's a major mistake people make. A lot of folks are like, oh, I thought they were ready to go and then they didn't buy it. Yeah, because you just let them float around. And I do that sometimes too. Here's the next one. You overcomplicate the sale. Your renewals on your, you're going to sign up for another contract here? Just auto renew. Stop it. Separate services, all complicated. Give them one number. the list of what you're going to do, the expectations of what you're not going to do, and do it. When you overcomplicate this sale, what's important to you is on the back end, you need to get your scope of work right. But your client doesn't care. They're going to the bottom line number that you're giving them, and then they're signing up. Now, again, I'm not saying have scope creep. I'm not saying promise them the world. You have got to keep it simple. When you overcomplicate the sale with too many contracts, too tight of a contract, you have these renewals. Just have an auto renewal. You have all these separate services. They don't like it. You will fail. It will screw things up for you. Don't do it, guys. Then you don't have a chip on your shoulder to perform an analysis. You need to get white hot passionate about doing tax and accounting analysis. Let me look at your books. Let me look at your tax returns. Send them over. I bet I find something. I bet your guy's lazy. I bet he's tired. You don't have to talk them down, but believe it in your bones. Get some passion. If you don't have that, you're toast. If you do have it, you're golden. All I did was in-person prospect and talk a little bit about the S-Corp, a little bit about tax planning with accounting, bookkeeping, and growing a business, and ask them if they're getting tax planning. Can I look at them? Nick and I would love to look at the tax returns. Worked every time. If you're not white, hot, passionate, if you don't have a chip on your shoulder, if you're not asking for it and really getting excited about it, not overly, but just confident humility. Hey, have you ever had somebody check your S-Corp to make sure it's right? Hey, have you ever had somebody go through your tax returns to find out if you're doing everything proper to reduce taxes? We find mistakes all the time. If you're not doing that, you're going to fail. You really are. Next, you're not investing in digital marketing to find the people with the problem. This is a little bit tied to overcomplicate or not getting enough swings of the bat. When you come down to this, digital marketing is beautiful. If you just get a set, and this isn't to sell my services, nice little Google ad with a nice little remarketing ad, you do that right, it works while you sleep. It is the best leverage, compounding leverage you can get. But if you don't find people with a problem, if you don't get enough swings of the bat, digital marketing is the easiest way to do it. Hire us. We will pay for ourselves so quickly it's not even funny. But that's a huge fail. Next, failing to get Google reviews. Local SEO. There's nothing more impactful on your local SEO. If you just dominate local Google reviews, I promise you, you will get a ton of clients. If you get in the top quintile of the volume of reviews in your category and you optimize it right, you can't help but get business clients. It will happen. If you don't get reviews though, you will remain stagnant. In fact, this whole thing's a game of momentum like a flywheel. And the Google reviews are kind of what notch you up and boom, set a new standard. Everything gets easier. Like the new level of water is just completely different. So you've got to get your Google review. Do not neglect this. Do not do it. You will screw your business up if you fail to do that. And then the last thing, not refilling the equity bucket. Your value leaks, especially when all that ever happens is interacting when negativity is happening. So if the only interaction your customer is having with you is when something goes wrong or they need something, it's like a naggy husband or naggy wife. Like, I'd like to have some good qualitative conversations. So that means you got to take time to spend with them. Call one of your clients after you did their books. Go find something interesting about their expenses. Go figure out a month over month, quarter over quarter report. Record a video, a Loom video, and refill this equity bucket. Do a little reminder of how much in tax you've saved them last year. Talk to them. Just make Loom videos and send them to them. Like, that's the best thing now, obviously don't reveal like lots of personal information, but if you don't refill the equity or relationship bucket, it's so easy to forget the value. You cannot forget that their perceived value will leak over time. Vision leaks. So these are 8 things. I think that's 8. Did I do 8? You guys are probably like, that's not 8, Rob. Those are 8 things. Not framing up valuable on an intangible object, not getting enough front-end activity, enough prospecting, ads, calls, whatever, not ringing out the package yourself, overcomplicating the sale. You don't have a chip on your shoulder to perform the analysis. You're not investing into digital marketing. You're failing to get Google reviews, and you're not refilling the equity bucket. That will cause you to fail.